All right, 18% tariff on Indian exports, down from 50%. We'll try and decode on the show what this means for India and US as well as India and the rest of the world. All right, the big story today, India and the United States have achieved a historic breakthrough after months of tensions, tough talks and intense negotiations. Now effective immediately, the US President Donald Trump has slashed tariffs on India to 18%. While Trump's social media post says that this cut to 18% is from 25%, US Ambassador to India Sergio Gore confirmed that the additional 25% secondary tariffs on India for purchasing Russian crude oil have also been eliminated. This effectively means that Indian exports to the US will now be taxed at 18% instead of 50%. Now, this development followed a phone call between Prime Minister Narendra Modi and US President Donald Trump late on Monday. Now, let's see exactly what Trump posted on Truth Social. He said first, it was an honor to speak to Prime Minister Modi. Trump reiterated that Modi is one of his greatest friends and a powerful and respected leader of India. Let's also look at everything else that Trump said in that Truth Social post. He said that India had agreed to stop buying Russian oil and much more from the US and potentially oil even from Venezuela. Now, Trump says, as per Prime Minister Modi's request, effective immediately, tariff on India has been slashed to 18%. Trump continues to say, and he says that against this tariff concession, India will move towards reducing tariff and non-tariff barriers on US goods to zero. Remember, Trump had earlier labeled India as a tariff king. Now, moving on, Trump's post also claims that Prime Minister Modi had committed to buy American as high as $500 billion worth of US energy, US technology, US agriculture, as well as coal and a lot more. Finally, Trump said he and Prime Minister Modi are two people who get things done. Now, as I mentioned, while we await a formal press release or an official statement from India's side, Prime Minister Modi in his tweet thanked the US President for slashing tariffs but did not mention India cutting tariffs to zero or the $500 billion buy American products that Trump claims. Prime Minister Modi's tweet also refrained from mentioning any details on either stopping Russian oil purchases or buying Venezuelan oil. Now remember, the US is India's largest export destination, accounting for nearly 20% of India's merchandise exports. Any disruption in access to the American market would have major implications for Indian exporters, jobs here in India, as well as India's growth. So how did we get here? Let's quickly walk you through the timeline. It all began on April 2nd, 2025 day, Liberation Day as Donald Trump called it, when the US imposed a 26% reciprocal tariff on several Indian imports as part of Trump's global tariff push. Just days later, on April 10th, those tariffs were paused for 90 days, but a 10% duty on all imports stayed in place. Cut to July 31st, the pressure intensified. Trump announced a 25% tariff on all Indian goods, warning of further penalties if India continued buying Russian oil. Then came the biggest shock on August 7th. Tariffs were hiked to a staggering 50%, the highest imposed on any trading partner. After months of tough negotiations, the breakthrough finally came on February 2nd, yesterday, when both sides agreed to a deal that cuts tariffs to 18% and resets trade ties. Now, notably, this deal comes just a day after India presented its union budget, parts of which were aimed at easing the impact of Trump's tariffs, especially from Indian exporters from the MSME space. External Affairs Minister S. Jaishankar is also in the United States at present this week for a key ministerial meeting on critical minerals. Now, Trump's announcement follows India signing a major free trade agreement with the European Union that was seen as increasing pressure on Washington to close the deal. Now, before we try and decode what this deal means, here's a collection of Trump's statements spread over the last 1 year sequentially, starting from before the April 2nd Liberation Day tariffs, going all the way to Trump announcing 50% tariff on India. Let's quickly look at everything Trump said about India over the last 1 year with respect to trade and tariffs before we introduce our guests on the show today. All right, we will get you those statements from Trump. But joining me this morning, Dr. Jayan Das Gupta, former Indian ambassador to WTO, Mitali Nikore, founder and chief economist, Nikore Associates, R. Sridharan, editor, International TV9 Network, Srinath Sridharan, policy researcher and corporate advisor. Let me first begin with R. Sridharan. I want to first understand from you, before we listen to that sequence of events that came to fruition last night India time, I want to understand from you a snapshot of the tariff slash to 18%. Great news expected on markets, excellent news for the economy. But how much of what Trump has said about India buying $500 billion of American products, as well as India slashing its own import tariffs on American products to zero on face value?
So first of all, Karthik, this is fabulous news because this has been the biggest overhang on the Indian economy, on the stock markets, on our currency. And, this especially, in the context of what Howard Lutnick said in January this year, that, the President Trump is waiting for a phone call. The deal isn't moving ahead because the call hasn't happened between the two leaders. So this is fantastic news. And if the two premiers or the two leaders are agreed in principle on the broad contours, I think that's fantastic news. We will see immediate relief all around. Now, as you yourself said, we don't have the details yet, apart from what President Trump has posted on his Truth Social handle. We don't have much information either from the NEA or from the Commerce Ministry in India. But I think there is no doubt, Karthik, that if tariffs were to come down from 50% effectively on almost half of Indian exports to 18%, this is a massive, relief. And we're going to see the US-India relations coming back on an even keel. As far as the 500 billion number that you specifically asked me, I think these are all long-term commitments that India will be making to US. I don't think the Russian oil is such a big deal anymore. Quickly on the oil itself, Karthik, oil is a global commodity. As long as India gets good price from any nation, we should be happy to buy them. As long as the landed price doesn't add unnecessarily to our oil burden, purchase burden, it should be fine. So I think we are on the right track after a huge uncertainty, a period of uncertainty. We are not getting back to talking. And I guess over the next weeks or months, we'll have a deal hammered out between the two countries, which is fantastic news, Karthik.
Absolutely. And we also have pre-market open data already reflecting on the heat map of Nifty. And it seems that it's going to be one rocking day for Indian stock market, Sri. As what we are seeing from the pre-open, we are seeing stocks of the entire banking space, HDFC up 6%, SBI up almost 6%, the entire IT pack rejoicing like we haven't really seen in the recent past. Even energy stocks, Reliance Energy, it seems, is likely to be up. Reliance Industries up about 6%. This is pre-market open data. We will, of course, get you a market perspective as well on the show later. But before I allow the rest of my guests to add their contribution to how this trade deal is going to move ahead from here, let's quickly cut across to the entire sequence of events leading to the 2nd of February when that trade deal was announced by US President Donald Trump.
As you know, Prime Minister Modi was here just recently, and we've always been very good friends. India is one of the highest tariffing nations in the world. You know that. I know. Thank you for shaking your head, but it's brutal. It's brutal. They're very smart, and he's a very smart man and a great friend of mine, actually. And we had very good talks. I think it's going to work out very well between India and our country.
India, very, very tough. Very, very tough. The Prime Minister just left. And he's a great friend of mine, but I said, "You're a friend of mine, but you're not treating us right." They charge us 52%. You have to understand, we charge them almost nothing for years and years and decades. And
it's very hard to sell into India. And they've offered us a deal where basically they're willing to literally charge us no tariff. We've made a deal. We're close to making a deal with India. Others we met with, and we don't think we're going to be able to make a deal, so we just send them a letter. If you want to play ball, you have to. This is what you have to pay. So as far as I'm concerned, we're done. We're sending out letters to various countries telling them how much tariffs they have to pay. Some will maybe adjust a little bit depending if they have a cause. We're not going to be unfair about it. And actually, it's a small fraction compared to what we should be getting. We should be we could be asking for much more. But for the sake of relationships that we've had with a lot of really good countries, we're doing the way I do it. India was the highest, or just about the highest tariff nation in the world, and one of the highest, 100 points, 150 points or percentages. So India was one of the highest in the world. They had won 175%, and higher than that. Negotiating right now, and it's also BRICS. You know, they have BRICS, which is basically a group of countries that are.
Well, I understand India no longer is going to be buying oil from Russia. That's what I heard. I don't know if that's right or not, but that's a good step. We'll see what happens, okay?
Let me go, please.
Indian officials have said that there are other countries that are buying Russian oil.
It's okay.
Like China, for instance,
It's
buys
okay.
more.
Yeah.
Why are you singling India out for these additional sanctions?
It's only been 8 hours, so let's see what happens over the next.
Sanctions
You're going to see a lot more.
So this is a taste of
You're going to see a lot more. You're going to see so much secondary sanctions.
To follow up on the India tariffs, do you expect increased trade negotiations, since you've announced the 50% tariff?
No, not until we get it resolved.
To follow up on the India tariffs, do you expect increased trade negotiations, since you've announced the 50% tariff?
No, not until we get it resolved.
All right, so this has been pretty much, the lead up over the last 1 year to finally this bilateral trade agreement between India and US finally agreed upon. Let's move on now to Srinath Sridharan. Srinath, just help us understand at this moment, even 18% tariff compared to 50% tariff is great news. But the fact that Indian exports were pretty much attracting zero tariff, entering American markets, the fact that 18% is still fairly high, isn't it?
Morning, Karthik. Yes, it is. It reminds me of the value retail format, right? You buy merchandise, you price it at 100 rupees, and you say, I'm going to give you 50% discount. And people think they've got a great deal.
Yeah.
Pay 50 rupees for it. Whereas the same shirt probably had been bought at 10 rupees and actually marked as 100 and brought down.
Right.
Sometimes it sounds very similar to that. And two, the reality is, while the markets might jump up with sentiment, let's not be sentimental about a deal like this. The devil lies in the details. We still don't know. And somewhere very eerily, the Indian side has not commented formally on whether it's a done deal, and what are the contents of it. Right. Of course, there are lots of sensitivities. Russia, President Trump said that India has agreed not to buy oil from Russia. And I don't think India can actually cut off the Russian connect at all. It's not as easy as Shri said, right? Oil is not a competitive market. The reality is oil is a very, very minefield. It's about very strategic energy security of each nation.
Right.
So can India afford to cut off Russia? I don't think so.
Okay.
There's also the defense deal. And then there is a larger picture of the visas. For example, there have been rumors or conversations that H-1B visa interviews are not available for Indians in this entire year.
Yeah.
So some of those will also fall into the entire deal.
Okay.
And agri and dairy, the bigger one. And very surprisingly, Prime Minister's tweet does not address that a deal has been done. He just mentions the 18%.
18% tariff. Absolutely. So let me take this across to Ambassador Jayant Das Gupta. Sir, US President Donald Trump's tweet very clearly says that Prime Minister Modi has committed, and he uses the word committed to buy American, and as much as $500 billion, where among other sectors, including energy, technology and coal, it also mentions agriculture. Up until now, over the last 1 year, the understanding seemed fairly clear that India is not going to give US any concessions on agriculture. In your opinion, sir, do you think India has sort of relaxed that self-inflicted pressure on itself and maybe gone ahead and given a little bit of leeway to US President Donald Trump in the interest of stitching this bilateral trade agreement?
Since the details are not yet out, I really can't make a guess. But President Trump has been in the habit of overstating his gains in the past. So I wouldn't really put much emphasis on the fact that India has agreed to lower its tariffs to zero and to open up its agriculture market also. As far as agriculture is concerned, India had made it clear that it would not compromise the interests of the farmers and dairy producers. But having said that, there are a few things on which India has been importing agricultural products. For instance, apples, all kinds of nuts, some amount of soya, uh, which is, of course, in the form of oil,
Yeah,
and so on. So it is not that the agriculture market is completely closed off to the US or to the rest of the world,
right.
but India has been very consistent in trying to protect its farmers and especially the
Absolutely.
small farmers.
So Mitali, just take this conversation forward because India's concerns on agriculture were twofold, if I remember correctly. One, of course, was soybean, and the second was GM crops. And GM crops, their entry to India, and virtually, let's say we were to take what Donald Trump is saying on face value, virtually zero tariff, and then, of course, India making that commitment to purchase, among other things, agriculture products from the US. What does this mean for India's economy? What does it mean for India's agri-economy and for India's farmers if India has given that concession to the US to open up its agriculture sector?
So I think, Karthik, let's unpack this a little bit. One is, of course, when we say opening up the agriculture sector, it means, for example, opening up to investment from US-based agri companies or allowing US to sell soybean, corn, etc.
Mitali, US is specifically saying that Prime Minister Modi has committed to buying $500 billion worth of American products, including agriculture.
Yes, but then of course we have to see what is the actual breakup of these products. I do think that a lot of that $500 billion investment, firstly, would be spread over multiple years because we've seen that with Japan. Japan is a very similar deal with the US and they've actually spread out their $500 billion over 5 years. So we have to see how much that period is. And secondly, we have to see what is the composition of those commodities because it could be that, for example, a lot of that is in the energy supplies, is in the energy and Venezuelan oil purchases. A lot of that could also be, for example, in the defense sector, and the defense sector being one of the areas where India has already struck a lot of deals, on a business to business level with the American companies. We've also seen technology is one of the segments he's mentioned. So I don't think, in my opinion, it would not make sense for India to open up the agricultural markets so completely, towards having American. I mean, we've seen Bangladesh, for example, is buying American corn as poultry feed, and it stopped buying corn from India. So, in such a scenario, for India, it would not be prudent for our domestic agricultural economy to actually purchase large quantities of unprocessed food. However, to bring in processed food, to bring in food, which is higher up in the value chain, which is specialized food products for which there is a premium demand, that is absolutely okay, and in fact that is good for our economy as well, for our consumption economy as well. But to just open up raw soya bean or raw corn or raw corn oil and starch, that it could be problematic for our domestic value chains.
All right, Sridharan, I know you have to leave, but I want to just quickly get another word from you, and this is now with respect to where India stands with this 18% tariff. And graphics on the screen right now, India's tariff at 18% now, lower than Bangladesh's and much lower than China's. And China, remember, is still stuck with that over 30% tariff, 34% or so tariff. The fact that India is now more competitive, if one could call it, for its exports to US. How does this sort of, change the balance of trade equation between US, India, US, China, and of course on the other side, India and Russia? Is there some strain on the relationship with Russia now?
So I don't see any strain as such, but the reality is how will we outmaneuver, let's say, the US in this case, in case we want to continue handholding Russia. And
Okay.
that's a reality. And two, what I would like to read in the details when the deal is announced formally is how is India going to deal with the digital and the technology majors that US has been pushing to have far bigger access to India. And there, again, as a comparison, China really doesn't need a lot of them, has kept the US big techs away from China. And China is far more AI sovereign, so to speak, considering where India stands in that. So I think the deal is not done and much more to do, not just about trade, but also about technology.
All right, a lot more to do, not just trade, but also technology. Thank you so much, Srinath, for your time. We will let you go. We will have you back, I'm sure, shortly again. But meanwhile, let's quickly take a look at the mood check on the Indian stock markets, which opened about 5 minutes back. And it seems that markets have given a thumbs up, but not as resounding a thumbs up as was expected in what the indicators from GIFT Nifty were suggesting, and also with respect to, the early pre-open data that we had seen. As things stand right now, about 5 minutes or so into market open, Nifty 50 is trading pretty close to that 26,000 level, about 150 points or so short of that, at about 25,859. The pre-market open data was suggesting that Nifty 50 would be in the vicinity of about 26,300, which was just about 70 points below its lifetime high, but not as much of a bullish momentum, even though one can't really discount the 3% move that we are seeing on the large indices this morning. Sensex also still in the 85,000 odd zone as things stand. Let's also pull up the Nifty 50 heat map and try and look at some of the stocks which are on the move this morning. And the Nifty 50 heat map suggests that Reliance Industries as well as Adani Ports and SEZ seem to be among the major gainers this morning. Reliance Industries stock is up about 4%. On the FMCG space, you're seeing Bajaj Finance is up about 6.5% or so. You're also seeing, for a change, a lot of positive action on IT stocks in India. Even though, let's clarify here for our viewers, the trade agreement or whatever bilateral trade deal that we seem to have stitched up with the US pertains to goods trade and not really services trade. But despite that, the positive sentiment is reflecting even on the services side, with IT stocks up more than 3% comfortably as a whole. Sridhar, let me bring you in. This was one of those most awaited market events, and we were really counting on three things when we sort of close the chapter on 2025 and enter 2026. The three things that India was and Indian investors were really waiting for. One was corporate earnings, which have been a mixed bag. Second was the budget, the union budget, where again there hasn't really been as much of a consumption push as perhaps we had become accustomed to. And number three was the India-US trade deal that we didn't really have a timeline on. All these three sort of key events now out of the way. Markets, in your opinion, sort of a little underwhelmed, or do you think a 3% move is good enough?
I think this is a very good response from the market, Karthik. I don't think market is really underwhelmed. I think the only thing market would have liked to see is more details of what this is, because I don't think at this stage it's fair to call it a trade deal. I know that a lot of media has been calling it a trade deal. This is a verbal agreement between two leaders. This is an in-principle agreement that a deal is now going to happen. And since US President, Donald Trump is in a position to lower and increase the tariff through his executive order, so the 18% tariff rate, which he's now introduced, he's lowered it to 18%. That comes into effect immediately, and he said so, in his own Truth Social post. But I also want to frame this development in how the world itself has changed since August last year, Karthik. One, Greenland happened, which then put distance between Europe and US. And then we saw that the reason why US put 25% punitive tariff on India for buying Russian oil actually doesn't hold anymore, because EU itself has done a deal, free trade agreement with India. Right? And they are buying Indian refined crude. So the whole rationale for penalizing India for buying Russian crude doesn't stand anymore. And let us also not forget that India was not a buyer of Russian crude. We were very happy buying it from elsewhere. It's only when the US administration came in and said, please buy Russian crude because we want the oil prices to remain low.
Exactly.
So I don't think our life changes dramatically as long as global prices remain at the level that India is comfortable at buying, because oil is inflationary at the end of the day.
Absolutely.
Anything and everything uses oil. The whole economy moves on oil. Right. So I think that's very important. Now, on the question of agriculture, Karthik, there is a template which we have established with EU for a trade deal, which is that we kept the agriculture sector out, while US may not yield on that sort of a point. But I guess there will be a midway that we meet on agriculture. There will be some concessions for sure that India makes, especially for maybe some premium agricultural produce that India probably doesn't produce. So I think there will be some concessions that we make. But what is important is that we are moving now forward on what was essentially a dead end because the two leaders were not talking. The ministers and all the other executives were also not hopeful of anything moving. So this is a big breakthrough to my mind.
Right.
That the two leaders are talking. They've agreed in principle to get this going.
Absolutely.
So I think that's a very positive development, Karthik.
All right. Ambassador Dasgupta, let me bring you back. So there were two aspects that India was talking about. One, of course, was the bilateral trade agreement, which we understand right now is what this agreement, as Shri rightly put it, is moving towards. And of course, the other one was the framework trade deal, eventually potentially leading to the FTA at some point. So where does the story go from here, Ambassador Dasgupta? Now, let's assume for a moment that perhaps, the final signing of the deal is yet to be done, and we don't know how and in which format that is going to be done. But eventually, how does the story go from here? Because this seems to be the bilateral trade agreement that we are moving towards. But the roadmap for for 2030 and doubling India's trade with the US and potentially an FTA are still big question marks right now.
I think from what I heard Ambassador Sergio Gore say to another news channel yesterday, late in the evening, is that the negotiators of the two sides will have to thrash it out. So this is only, I think, the announcement of a kind of an outline, and that too for the first phase, when President Trump and the US administration had very arbitrarily put 25% and then another 25% tariffs on India. So this is just the announcement, and the details are yet to be worked out, which will become clear as the day progresses, with announcements from the Ministry of Commerce and Industry, Government of India, as to what it exactly means. So we will have to wait for that. The second point is that on this agriculture, India had never said that we will never buy anything by way of agriculture, because it has already given a commitment to the WTO by which it stands.
Right.
The issue is, it is not confined only to soybean and corn, because those were the issues relating to GMO, the genetically modified corn and soya.
Right.
But there are other issues about rice, for instance, where the US wants market access.
Right.
There is wheat on which it wants market access. So a whole host of products on which it wants market access, which are produced by the small farmers in India. So I think on that, there would not be much of a give on the part of India,
Okay.
even when the details come out. The third point is, on this $500 billion worth of purchases, I think it is just a kind of wishful thinking on the part of India, the president of the US.
Right.
India wouldn't give such a commitment, and mind you, it does not include arms purchases. Arms purchases are outside
Absolutely.
the purview of the trade
Defense
deal.
has not been mentioned by US President Donald Trump in his Truth Social post.
So if you look at the past record, India has been buying in the region of $45 billion per annum from the US.
Right.
Let us say it substitutes, and it would not buy all its oil from the US.
Right.
Because it won't want to put all its eggs in one basket.
Absolutely.
So even if you have an increment in its imports, it would go up to $60-70 billion.
That's right.
So it is unlikely that we would be able to buy $500 billion in the near future, in the near term, let's say 5 years or so.
Right.
Which
so one could safely say that this could be potentially a deal of Trumpflation, especially when it comes to numbers. But we will be back with you, Ambassador Dasgupta and Shri. We will slip into a very, very short break. But coming up on the other side, we'll also be joined by Kranti Batini to just get a deeper understanding of how the markets are likely to move from here, given that all the three tick boxes have been ticked when it comes to 2026 and just about a month or so into the calendar year. Stay with us. We'll be back after a very, very short break. Still talking that big India-US deal which seems to have been agreed upon, and markets are giving a fairly resounding thumbs up to India and US, especially US slashing tariffs on Indian exports to 18%. As markets opened, we saw both Sensex and Nifty jumped up about 3% or so, and that momentum continues to hold. Just 15 minutes or so into trading, Sensex has climbed up more than 2,200 points in just the first 15 minutes of trading. Meanwhile, Nifty 50 is also up about 700 points. As things stand right now at 9:30 a.m., Sensex is at a little shy of the 84,000 level, 83,900. Nifty 50 about 250 points or so below that 26,000 odd level right now. The small cap and the mid cap space also pretty much in line with the larger market indices, moving up in the 3% or so zone. Volatility on the Indian stock markets is high as expected, with those massive cuts that we saw on budget day and the massive rise that we are seeing. The swings have pretty much kept the India VIX, which is also referred to as a fear index, in the elevated territory, now at levels of about 15 or so. Let's pull up the Nifty 50 heat map and look at the stocks in action right now. The IT sector, the banking and financial services sector, as well as the consumer durable sector, the health tech sector, the pharma sector, the energy minerals, pretty much every sector, every stock on the Nifty 50 heat map in the green this morning, barring just ONGC. And of course, there is an oil story here that we will come to. But Reliance Industries, importer of crude oil, refiner of crude oil, exporter to markets outside of India, really ticking up well this morning. Potentially the statement coming from the US president that India is going to potentially include Venezuelan crude also in its oil mix. Let's put all this into perspective. Kranti Batini joins us now. I also have my other guests here with me right now, but first up to you, Kranti. I want to understand, we have seen market respond favorably and unfavorably given news events, news triggers, but we were expecting potentially that perhaps the day the India-US trade deal gets signed, markets are going to breach their lifetime high. I understand that markets are still recovering from budget day cuts, but do you expect the momentum to continue from here on?
Yeah, Karthik, it's a big day for the markets. It's a sentimental booster to the market. Last few days, the market sentiment has been weak. In fact, we went to the range of below 25,000 level, which created a bear hug on the market. But overnight, the booster to the Indian markets is in the form of trade deal. Definitely market received in a positive way. And what we are going to derive from this trade deal is definitely it's a positive indication to the foreign portfolio investors who have been waiting and who are exiting from the Indian market, and the long only funds have been sitting on sideways. So this deal definitely is a positive indication for the foreign portfolio investors. And apart from the deal, if we get into the details, and the devil is in details always, and by and large, prima facie at this point of time, the stocks which have a more exposure towards US markets are concerned, like the sectors like textile, gems and jewelries, and aqua. These are all the sectors are today morning they received a positive response, and many of these stocks are skyrocketing this morning. By and large, it's a positive indication to the market, and Nifty could able to touch in the pre-opening. It went above all-time high level. It touched 26,300 level. It touched in the pre-opening above 26,300 level. We can see some kind of adjustments. That's also good for the market in the medium to short term. The pendulum has been moving extreme exuberance to extreme pessimism. Yeah. Today, the pendulum is moving towards the extreme exuberance.
All right. I want to understand from you what this means even for crude oil prices, crude oil imports into India, and of course the impact on refiners like Reliance Industries. Given the statement which has come from the US president, of course we don't have a clarification or a confirmation from the Indian side just as yet that India has completely agreed to stop buying Russian oil. India is going to buy more American oil, and India will also potentially buy oil from Venezuela. Overall, how do you see the oil market globally as well as the impact on India?
By and large, given the kind of the current geopolitical issues are concerned, oil has been stable. As long as crude oil prices are below $60, around $70, it's a favorable condition for Indian economy is concerned. Now coming back to your question, as I mentioned, the devil is in details. How this is going to progress in the next couple of months, that is extremely crucial. By and large, buying Venezuelan oil is positive, also positive indicator for Indian economy. The reason is the NIMS, the petrochemicals and also refining margins are a higher note from the Venezuelan oil, but there would be a differentiation of the pricing, but it can be offset with the kind of a refining margins for the Indian refineries are concerned. It's a positive indication, but how the transformation and the shift from the Russian oil from Russian oil to Venezuelan oil is going to take place. That is a transformation that's going to take place over a period of time. We need to get into details, and that would take place going ahead.
All right. So no timeline as yet. Stay with us, Kranti. I want to continue for just a moment, Shri, with you now on how this story is developing geopolitically. Because we've seen Trump's adventurism, if we can call it, both in South America as well as going all the way up to Greenland. Do you think, given his midterm elections in November, pressure on approval ratings, has it been more in Trump's interest to go ahead and quickly announce that trade deal? Or do you think there was enough and more pressure on India, and India has also potentially given in to some of Trump's demands?
Definitely, Karthik, there is pressure on President Trump. I'll come to the midterm elections, but also there is the US Supreme Court, which still has held back on its rulings. How long it holds the ruling, we don't know. But that's another source of pressure. But the real pressure, of course, is from the American consumers, the voters, who are not happy with a lot of the things that are happening in the economy. We haven't yet seen a significant transmission of the tariffs into consumers, but many economists are of the opinion that as the production and as the supplies and everything stabilize, we will see the transmission eventually happening. There was a recent study by a European think tank stating that the transmission should be happening very shortly now. And if that happens to coincide with the midterm elections, then that will be a source of problem because Republicans, of course, don't want to lose control of Congress. If they do, then it becomes very difficult for President Trump to push through his agenda. And he does have a sweeping agenda for America. So I think it's very important for President Trump to make sure that the disaffection that is there right now among the people in the US it doesn't snowball into a situation where it affects the party's fortunes in Congress. So that's very important. Now, also, we have the issue not just of Greenland, which has put some distance between their European allies and the US, but also there's an Iran situation which could potentially be developing. So given all these multiple fronts which President Trump has opened in the interest of the US, I think he needs an ally like India to be on his side, absolutely, because India is probably the best, the most stable ally that US can hope for in this part of the world. And that was the case until the President Trump suddenly decided that, India needs to be penalized for buying Russian oil, apart from the other tariff that he put. But even then, they had spared almost half of India's exports, Karthik. With this, I'm happy that even, you were asking, Srinath, about the pre-Liberation Day rates, but I don't think there's any going back to that, honestly, Karthik. So we should be happy that it's now down to 18%, because that's still manageable for our exporters. While developing other markets will happen, it is a solution. US is the largest consumer of almost everything around the world. So there is no reason why we should lose the US market. And US as a country, this relationship needs to be nurtured and built, especially given what's happening geopolitically. So I think President Trump understands that very well. And the concession that the US will make will reflect that understanding of the importance of India as an ally, Karthik.
All right. I will come back to Ambassador Jayan Das Gupta before I come to Kranti once again. But Ambassador Das Gupta, India had a trade surplus with the United States, and that is something that had irked US President Donald Trump, referred to multiple times, including, those Liberation Day on the 2nd of April, where he had said that India has a 56% tariff on American exports. But overall, this trade surplus that India enjoyed with the US, is that now likely to come under pressure with, at least if, again, on face value, if we were to believe that India is going to buy $500 billion worth of American goods over time? We don't know what that timeline is, but is India's trade surplus with the US going to be under pressure? And overall, what would that mean for India's current account deficit?
From what I can perceive, India will be buying more US oil and gas. And of course, it would be perhaps at the cost of Russia. So we have a huge trade deficit vis-a-vis Russia. That will come down, and there would be a reduction in the trade surplus that we have vis-a-vis the US. As far as technology is concerned, Indian companies have already been buying US technology where the US is willing to sell technology, because that is a major problem. Technology transfer and co-production, for instance, is a major problem that Indian industry is facing. So